This video is going to finish up the in-class example we were doing together. What remained were required assignments 4 and 5, which is to take the adjusted trial balance after we had completed our 4 adjusting entries and create financial statements for the month of August. After that point, we should do our closing and a post-closing trial balance. Let's start with the financial statements. If we look at our adjusted trial balance here, let's first go through and try to identify which accounts go on which financial statements. So as you can see, the list of accounts on a trial balance are generally organized by statement and in order of liquidity, or the asset or liability that can be most easily converted to cash. So look at this list of accounts and try to figure out which of the accounts are assets. Here's the cutoff for assets. Everything from this point is going to be on the asset side of the balance sheet. Let's break that down further. Which of these accounts are current assets versus non-current or long-term assets? Right, that's going to be that distinction. So our cash, receivables, prepaid, inventory, interest receivable, and note receivable are all short-term or less than a 12-month period. The equipment, on the other hand, has a long-term useful life and therefore will be a long-term asset, and that also includes its contra account or accumulated depreciation, hence its credit balance. Which of these accounts are liabilities? It's a good bet that anything with payable in the title is going to be a liability, and for this problem they are all current. Which of these accounts are equity then? That's going to be your common stock and retained earnings. So these taken together are going to be your balance sheet. What financial statement does your dividend go on? This guy is going to go on his own statement, the statement of retained earnings. So we'll separate him out. Everything else is going to be part of the income statement. Here you can see that we have 2 revenue accounts and several expense accounts. So now I would suggest that you, as a practice for what you remember from your introductory course, make the financial statements. Please be as detailed as possible. You should start always with some type of title with the company name, identifying what statement and whether it is a period in time or point in time account. You can do that through the wording. Also be careful to separate our long-term and short-term assets and liabilities when applicable. For the income statement, include all of the subtotals that we generally like to see on the income statement, such as profit margin, operating income. Here are what the financial statements should look like. So first you should start with your income statement. Remember from the lecture slides, I told you it was a good idea to create the statements in the order of income statement, statement of retained earnings, and then the balance sheet. You need to figure out whether you have a profit or loss that period, figure out how much of that profit and loss is going to be retained in the company into retained earnings, to ultimately calculate ending retained earnings, which is the figure that goes on the balance sheet. So it makes the most sense to create them in this order. Also, please be sure that you are using either a negative sign or parentheses. Don't use both. That's a double negative and would mean to add those figures. But if we want to subtract them from our positive numbers, you would need to do either of those actions to distinguish that for me. So on the income statement, notice that it's for the month of. That should tell you it's a range or a period of time account, so it should be from the beginning to end of August. Notice gross profit. That's something you should always have. So you take your sales minus the cost of goods that were sold. Therefore you get your gross profit. All of our residual operating expenses, which you should total up here, giving us a very important figure, our operating income, and then subtracting out any gains or losses, which generally go in the other category. Finally, of course, you're going to want to have your net income figure. So you should have had at least those 3 categories easily defined. Next, we need to do our statement of retained earnings. Again, this is a period of time account. Here you can see we had a beginning balance and retained earnings of 0, meaning that this company just came into existence. There were no prior period profit or loss. We've added in our profit from this period, so see that net income being added to our statement of retained earnings. but we also had a balance in dividends of $1,000, so we need to decrease the amount of earnings into the firm that period by the amount that was given to shareholders. So subtracting out that $1,000 to get our ending balance of retained earnings. Then we can create our balance sheet. You can either categorize the statement in long form where there are the assets totaled on the top part and the liabilities and equity totaled on the bottom part, or you can do it account style where the assets are on the left, liability and equity are together on the right. And of course, these totals should always balance to make sure you created your statement correctly. Please make sure, as always, to label your statement and also to note that it's for the month ending, meaning that these are point-in-time accounts. So this is just a snapshot of their balances on the last day of the month. Notice that you should have had a balance for your current assets, and then you have your non-current assets giving you a total asset balance. Notice how we display our contra assets here. So you have your equipment less your accumulated depreciation. Technically, for full disclosure, we should have had a contra account for accounts receivable by doing an adjustment for our allowance for bad debt, but that information wasn't given in the problem, but generally you will see that. On the liability and equity side, you can see all of our current liabilities added together, getting us that subtotal, all of our shareholder equity and our retained earnings figure, so you can see where we got that $4,350 for ending retained earnings balance, giving us your total shareholder equity. Then those two numbers can be added together to get your total L&E, or liabilities and equity, which should equal assets. Now that we've created our financial statements, let's do requirement number 5, preparing closing entries and a post-closing trial balance. Looking at the adjusted trial balance, you can determine which of our accounts need to be closed. Similarly to how we create our financial statements, you can start the closing entry process by looking at the adjusted trial balance. First, it's important to identify which are permanent accounts that live forever or are never closed, and which are temporary or nominal accounts that need to be closed this period. So we know that everything on the balance sheet is going to be a real account. Let's draw a line at the end of the equity accounts here. We know that these guys are never in closing, so you should never have any of the balance sheet accounts in your closing entry. Your dividends or your statement of retained earnings should be closed, as should all of your income statement accounts. To close our dividend account, which has a normal debit balance, you would need to credit it. So we'll start our closing entry by doing our dividend closing by crediting it for the $1,000. Where do dividends come from? Or what did we give up in order to distribute earnings to our shareholders? We gave up ownership of the company, so retained earnings. Equity account, normal credit balance, we're decreasing equity when we pay dividends, so you would debit retained earnings. So now the dividend account is closed. To close everything on our income statement, similarly, you would do the opposite of what their balance is on the adjusted trial balance. So first you would need to close all of your revenues. Revenues have credit balances. To close them, you would debit them. So we'll debit sales revenue, and interest revenue. Those guys are closed. And we would need to close all of our remaining expenses. Expenses have normal debit balances. To close them or zero them out, we would need to credit them. Now those will all be closed out. Now those are all closed, however, this journal entry will not balance. That's to be expected, right? We have a debit balance of $40,100, and we have a credit balance of $34,750. So that means that we have a difference of $5,350. Use the income summary. It's an account I just created that captures what essentially is our net income for that period, but it is an extra temporary account, which means it only exists for about 30 seconds. I'm going to go ahead and close that right now. I close my net income into income summary, so it currently has a credit balance. To close income summary, I would need to debit income summary for $5,350, and I will close it into retained earnings, which is an equity account, normal credit balance. So by crediting it, I'm increasing equity or closing all of our earnings that period into equity. Now notice that if we looked at the retained earnings T account, it had a 0 beginning balance. We decreased it by dividends initially, so it had a negative balance at this point. Then we add in our profit, and so ultimately our ending balance was that $4,350 that you saw on the balance sheet. So this is one way to do the adjusting entry. You could simplify this. One way would be you could not use income summary, although your book does ask you to use it for your homework, and instead just put that $5,350 amount that we need to balance directly into retained earnings. You would ultimately get the same thing. In fact, you could simplify this further if you wanted and not do the dividend account separately. You could close dividend in the exact same journal entry by, as we did before here, crediting it by $1,000, and then you would need a balance of $4,350 in order to make your journal entry balance, and that would be directly into retained earnings, so ultimately you would have the same effect. On the homework, I do suggest you use income summary, as that is what you're going to have to do to get the correct answer and get all your points. On the exam in this class and on the CPA exam, simply do whatever makes the most sense to you.